Hello, investors. Well, this week I looked at 46 diversified companies and only 7 made our list. Of those, one is a clear standout for your income portfolio. By the way, GE, Danaher, Honeywell, ITT, Ingersoll Rand, Siemens, and Whirlpool, sorry, didn't even make our list. Come on, let's dive in and find out who's that winner that you should be looking at. Please don't forget to like and subscribe to this channel. Hit that bell so you don't miss a single episode. And tell your friends about it so they can join in the discussion as well. Hey everybody, well we're diving right in with AMETEK. Their ticker is AME and their yield is a paltry 0.6%, and that's on $88.80. All of the data that we're going to look at is valid 11 October. All right, we can see that AMETEK is qualified as a cash flow per share, CF1. That means they had 17 years of increasing cash flow per share with the exception of right here in 2019. Now remember, for cash flow and earnings, we do allow one negative year as opposed to dividends, which are only allowed one flat year. All right, they are not qualified for earnings or dividends. Here's what that looks like on the long-term trend. Now you can see they've got some pretty reasonable upward trends here, but you know, these negatives are troubling. And here's the year-to-year changes. All right, next up, Barnes Group, ticker B, letter B. Their yield is 1.3% on $49.86. Now, you look over here and you can say, wait a minute, what's going on? They're not qualified for cash flow. They're not qualified for earnings. They're not qualified for dividends. Well, they were qualified for earnings. They used to be an E1. And 19 is still cooking in the books here. So once they wrap up their reporting for 19, if this stays, then they will be not qualified and will need to come off of the list. All right, here's what that looks like on the year-to-year. You can see we had this upward trajectory. They took a hit here, and then they were back up on a very similar slope, and there's their dividends. And that's what that looks like on the year-to-year. Brady Corporation, BRC, their yield is 1.7% on $52.59. Not qualified for cash flow or earnings, but they are a Div 0, 17 years of increasing dividends per share, although at 1.7%, that's nothing to get too excited about. Here's their long-term trend line, and you can see that's just really flat there, nothing going on in the dividends. And here's the year-to-year changes. Carlisle Company, CSL, their yield is 1.4% on $142.04. Not qualified for cash flow, not qualified for earnings, but they are a Div 0, 17 years of increasing dividends per share, again at 1.4%. That's really not too exciting. Here's their year-to-year, here's their long-term trend, and here's the year-to-year. Now what you can see here though that could be of interest is it looks like they're trying to do better with their dividends here these last several years, so might be worth paying attention to Carlisle. Parker-Hannifin, ticker PH. Now their yield's a little bit better at 2.0%. Now that's still not above the benchmark that I like to see, but 2.0% isn't too bad, especially on $175. Not qualified for cash flow per share or earnings per share, but they are a Div 0. So now we're talking a little bit here. 17 years of increasing dividends per share at 2%. And here is their long-term trend. You can see here now, you can see the upward slope on the dividend. Again, it's nothing to get terribly excited about, but it's not bad. If you take a dive into them and look at them and you like other things about them, they might be worth going into. 3M, here's our winner for the income play in these diversified companies. Their yield is 3.6%. That's very healthy. That's on $158.38. And you can see they're not qualified for cash flow or earnings, but they are a Div 0, so 17 years of increasing dividends per share. And right now that yield is 3.6%, so that's a pretty good yield on a good, strong company. Here's what that looks like on the long-term trend. You can see in 13 they actually started paying out more. That slope changed in a good positive direction. And you can see overall their trends are really strong. And here's the year-to-year changes. Now, last on the list alphabetically is United Technologies, UTX. Their yield is 2.2, so that's respectable. And that's on $133.79. Not qualified for cash flow or earnings, but they are also a Div 0. So here we are, UTX, United Technologies, reasonably upward sloping trajectories on all three lines, and here's their year-to-year change. Well, let's stack them all up against each other and see what we see, and let's understand why 3M stands out so much. First of all, if you look at the cash flow per share, you're going to say to yourself, well, wait a minute, 3M, this gold-colored line, is down here in this grouping of second-tier players. Parker-Hannifin is up here at number 1, so you might be looking at Parker-Hannifin here saying, well, I like that cash flow, but let's not lose track of the fact that 3M had a good, strong cash flow, outperforming Parker-Hannifin until just recently, and 3M is still in a good mix up here with the leaders. On the earnings per share, again we see Parker-Hannifin outperforming 3M, where 3M used to be outperforming Parker-Hannifin. You can see throughout the history they've mixed it up a few times here, but Parker-Hannifin, 3M, right up there, number 1 and 2 spots, and the other suspects here playing in as well in this whole mix. But here, let's look at these dividends now. Dividends per share, you see 3M is clearly the standout leader in this crowd. Parker-Hannifin is number 2, and if you look over here on the dividend yield chart, you can see exactly why this is working, right? Here's 3M at 3.6%, and they are way above the rest of the crowd here. You're followed quickly by UTX and Parker-Hannifin here, coming up in second and third. So if you're looking for your income plays, you got 3 good players to look at here. 3M, I believe, is the standout, but UTX and Parker-Hannifin are also worth consideration, especially if you look at the different industries that they're in. Now, they're all called diversified industry because they have multiple things that are wrapped up in their name, but they are kind of focused in separate areas. So what are you thinking about adding to your list? Do you have one of these players in your list already? There's usually a lot of people that have 3M. Would love to hear your comments. Please leave your notes down below. And don't forget to tell your friends about this channel so that they can take a look and join in this conversation as well. Y'all have a great week, and we'll talk to you again.